Hello, this is Martin from seekedge. Welcome to the seekedge trading channel, trading and investment planning channel. Welcome everyone. So, welcome to the pre-market analysis show, and let's get into the analysis of the Nifty and the Bank Nifty straight away. So, today is June 9th, Wednesday, 2021, and this is the Nifty 50 chart you're seeing here. What do we have yesterday? You can see that here you have yet another small body candle. What kind of candle is this? This is something known as a hanging man pattern, a potential hanging man, you can say. So Nifty has a hanging man candle pattern, which possibly indicates a reversal. A hanging man on a rally upwards normally gives an indication that there could be a correction. Along with it, as I said yesterday, you can see that we have multiple small clear body candles that has been happening for 5 sessions last. That means there is a small range and there is indecisiveness and there is big fight happening between the bulls and the bears, and finally have a hanging man on the top. This is probably slightly bearish. What do we have on Bank Nifty? Right, Bank Nifty. Here you have a clear red bearish candle that you can see there clearly, right? And however, at the same time, you can make a note that the Nifty indices just trying to load the charts once again, so you can, yes, let's get, this is Nifty Bank that we're talking about, and this is the chart that we are looking at, Nifty 50. Yeah, once again, this is investing.com flag. So you can see that yesterday, in spite of this red body candle, it has made a all-time high at another all-time high had happened yesterday. So the what happened? Let's instead of this, let's go here to the same charts that we are. Let's see it from trading view. That looks better, right? So yesterday, if you look at the 15-minute candles, you can see that it gapped up and retraced, and then it had a slight trending, but it could not reach the previous level where it had gapped up earlier. So it gapped up, retraced, and trended up, right? And at the same time, if you look at the Bank Nifty charts, you can see that it was not similar. It was clearly bearish down. It gapped down, and then it did a consolidation within a range, right? It did a consolidation within a range after a clear downtrend, right? So that's where we are. There is a momentum resistance that we can see there. If you look at the Nifty charts on 15 minutes again, if you go back to the Nifty, you can see that the momentum has resisted 2 times. It's an M pattern on the RSI momentum. You can see that 2 times it hit the bullish zones and then get back. That means there is some kind of resistance for it to move up. That's why it ended up here, right? And the Bank Nifty gapped up. So Bank Nifty, what had happened? No, I already shown that it gapped up, retraced, and then consolidated. So the momentum dipped, but the range shifted. So what is the range shift? So here this is Bank Nifty 15 minutes charts. Here you can see that it dipped and went into the bearish zones here, right? And then it climbed and got back. From the bearish zones, it climbed and got back to the sideways zone. This is known as a range shift in the momentum. So momentum dipped, but then did a range shift to the sideways. A range shift is slightly bullish, no, because there is a shift from the bearishness to the sideways. So that is a momentum concept that you learned. Now let's look what happened to the trend. The Nifty trend is intact. Right? The Nifty, if you look at the daily trend, right? Even though we have so many, small candles, you can see that it's at 71.5 kind of levels. So there is a slight bend that has happened the other day, but momentum is intact, absolutely no problem. What about Bank Nifty? Bank Nifty yesterday slipped into the sideways zone, right? So the momentum has taken a dip and moved from the bullishness to the sideways zone. So there was a divergence that was seen the other day here, right, at these levels, which was supposed to be bullish. So this is the momentum divergence that you can see there. The price is heading up and then the momentum is going down. So this divergence, if it had worked out, it would have reached these levels of 36,500 kind of, the 36 kind of levels it would have taken back. But unfortunately it got negated. No, actually it is not. Yeah, so it is still not negated. I think I have mentioned here it is negated, and validity may be negated. It's not fully negated. It is negated only if it goes below this level of 34,430. So there is a chance that Nifty can bounce up. It's bullish divergence. But as if it breaks this level of 34,430, then it gets negated, right? Otherwise, there is still a chance that it can move up and then cross and go. So that's something related to what you see in the now trend. So we saw the price action, we saw the momentum. Now we need to see what is the trend indicator ADX saying. Trend indicator ADX for the Nifty is saying that actually the bullishness has increased. It is moved to 36 kind of levels. The strength has increased, but the bullish DMI indicator has dipped down, but the strength is intact. So nothing has happened to Nifty on the trend. Look at what happened for the trend for the Bank Nifty. Bank Nifty, you can see that the strength has taken a dip and the bullishness indicator DMI plus positive has taken a dip. So overall it's, but still not bearish. Now only if a crossover of these two happens would the trend be bearish. So it's bullish still, but the strength is reduced. Now what do we see next is the support and the resistance levels, right? The support resistance levels can be so the first resistance for the Nifty would be 15,775, and that is the all-time highs that it made yesterday. That would be the first hurdle for it for today. After that, there is a fib extension that we have been talking about. 16K would be a psychological resistance as well as a fib projection resistance. And the Nifty support levels can be seen at 15,330 and 430, right? At these levels, right? 15,330, 430 have the previous resistance area. Now that could be a support, right? And it also has a this 15 330, 430 kind of levels can also act as a fib 21% retracement, right? And below that you can see that it's a 1550 kind of levels. 15,000 would be another major. So let's see how that fib retracement from the last swing, how is it working. So if this is the last swing, if you do a fib retracement, you can see that somewhere in this zone, right, it's 23, it's not 21, correction there, sorry. The fib 23% retracement can clearly be seen here at this level. So that is a point where it had broke out earlier. So it can retrace up till here, 15,400, 350 kind of levels, which acts as a fib support as well as it's also previous resistance. Right, so that is what Bank Nifty. Let's see what is happening to Bank Nifty. Bank Nifty has the first, resistances are very clear. Wherever the, it is still not broken. So the all-time high and the previous swing highs are resistance areas, which is at these levels of 36,500 and 37,700. Right. The support can be seen as 34,300. It's the previous resistance. Right. So if Bank Nifty retraces, the first area would be 34,000, this levels, and that is where it broke out from earlier. So it may come here, reside or consolidate in this area, and before it can move further up to break. Right. So that's the support resistance levels that we can see. The supports are 34,300 and 33,800, 34,300. So it's the 50 DMA. So 50 DMA was shown yesterday on another chart. With the other chart? Yes. So this is what we are talking about. This area where the 50 and the 100 AMAs are coming together. This area can actually support if it breaks the previous resistance areas of this 34. So that is what is mentioned in this 34,300 first and 33,800 and 34,300 50, 100 AMA. Moving average support areas. Now look, let's try to correlate this data with the open interest analysis, right, of the options and the futures. Futures open interest for the Nifty and the Bank Nifty both. Look at the OI additions. That is, it's a short build up, so it's bearish. Options, you can clearly see that the 36,000 and the 16,000 and the 15,800. These are the resistances that you can see there. And 15,000 is the major, it's the largest put area where it can actually support. Before that you have a lot of supports down here. You have support at 15,700, 600. So these are all, there is good supports there, but overall you can see that it is it's bearish because the resistance, the call writing is where is more. You can also see that there is a 15,800 and 16,000 additional resistance additional calls have been returned this yesterday at this areas. Okay, so it's slightly bearish. You can also see that the PCR ratios has dipped to 1.0. Yesterday it was 1.55 or something. So it's getting more bearish. Bank Nifty, this is for the 10th June expiry, day after tomorrow, or tomorrow actually, right? It's for tomorrow. So the open interest for the Bank Nifty, you can see that it's again bearish. Highest call rating 37,000 and the struggle is happening at 35,500, and you have very small amount of put writing that is happening. It's supports a weak, huge resistance. So it's bearish again. 0.55 is near to bearish. It's very bearish, in fact. Right. So that is what is mentioned here. So the OI, according to the OI, the levels are, this is where the first resistance is seen at this is actually 700, right? The correction there again. So first resistance is 15. As we saw, first this is 700. This is where these two places, 15,700 and 15,000. That's what is mentioned here. Now futures showing short build-up, and for both it is short build-up, but it's bearish for all the options data also. PCR India VIX is again dipping. It was 15.5 something. It is again dipped to 15. In fact, it went below 15 several times yesterday and closed at 15.1. Now, what about the institutional buys that has happened yesterday. Yesterday was 1,400 crore buying, and DAs had a heavy selling of 1,600 crores. Why DAs are selling? But not sure. But it's good that the FIs are still buying, right? So it gives us hope. The dollar index is something that we have to look at in the US market. Before that, see what is the SGX. SGX is flat, slightly dipped bearish, right? So US market Nasdaq is flat, Dow Jones flat or slightly bearish, and S&P 500 is flat. So the US market, nothing much is happening. It's neither bearish nor bullish. Singapore exchange also is flat, and dollar index, if you see that, you can see that it's still holding the 90 support. There's no up move that's happening. It's hovering around that place. USD INR is also doing the same. It attempted to move up yesterday, but yes, it is at a resistance. Again, 73 is the levels that we have to look out for. So that is a summary. That's what has happened, right? Now, how do you wrap it up, right? So the open interest is bearish. PCR says it's bearish. Put call ratio. Candlestick patterns, hanging man on the top, right? Momentum slipping, on the bank nifty, and all this indicate the market could be, down, making a down move, because it has rallied a lot. It has been, moving up since quite some time. So the rally has been happening since long, right? Continuously walking on the Bollinger Bands. It doesn't mean moving up. So it needs some correction. Correction may be due. That's what the indicators, open interest in the PCR all indicates. So the positional players, people keep it, who's already gone long, can make use of this Hikinashi candles, and then wait for a clear bearish, right? How do you do that? I can just quickly show you that. So if this is Nifty charts, then if you may get confused whenever the candlesticks like this come. So Hikinashi, if you convert that into Hikinashi candles, you clearly see that there is nothing that happened. It's all green. So the moment you see any bearish candle like this, you can exit something. Until then, you can hold on that if you're a long term. If you're an intraday player, trader, then watch the price action. You just have to see whether the Tuesday high is broken, Tuesday low is broken, Tuesday close is broken, right? The hourly swing highs and swing lows, and then you can trade accordingly. Now tomorrow is the expiry, so there is a theta decay that will be there today and tomorrow heavily. So it is possible to strangle or straddle for the intraday, and if you're fine, you can close it intraday. And if you want to carry forward, you should hedge it at the strike levels and close it by expiry tomorrow. So something like strangle and iron flies, all the options would be a good trade. So that's the summary wrap up and the actionables, for the pre-market analysis. Friends, please subscribe to the channel and hit the like button if you like, and give us comments, feedback on how we could improve this, or what kind of other contents can be planned for. Happy trading, and good day.